The real estate market here in southeastern Wisconsin is kind of leveling off going into quarter four. I don't say cooling down because, well, we've kind of anticipated this with both very, very low supply and still slightly above average demand. There's nothing really earth-shattering that's changing in our local area market from the past couple of market updates that people are like waiting on the fences for a big bubble burst or anything like that. So if you're still waiting for that, you're going to need to wait a little bit longer. My name is Jacob Sheets, your Wisconsin real estate agent, and me and my affiliated agents actually cover the entire state of Wisconsin. So whether you're looking to buy, sell, invest, or you're wanting to learn about more about becoming a real estate agent or joining us at our group here at eXp Realty, you can actually do that with the link both in the pinned comment and the first line of the description, so you can get directly onto my or one of my affiliate agents' calendars directly and hop into a buyer consultation, listing consultation, or just a candid conversation with one of us, really at a time that's most convenient for you. And only really when you're ready to do that. So with that, let's go look at the October statistics here with our November market update so we can kind of see what's going on in the market right now and project what's going forward for the end of quarter four. You're very familiar with this slide by now, right? So let's take a look at our statistics. We have our active listings and they are, it says down 2.6%, but let's look at the actual numbers, right? We got from 2,800 about and around 2,800-ish, almost 2,900 from last year to this year. What does that mean? So maybe 100 less listings. Honestly, it's basically saying it's the same. So listings up, not really. It's pretty much the exact same as last year. Median price per square foot, this is where there's a little bit of a difference, 5.5% upwards. You can kind of say appreciation, you could call it, of now $190 per square foot for the total average of all of Milwaukee metro surrounding counties, all clumped together. Months of supply, 2 months of supply, same as last year. See, if you look at just the stats, it says it's down, but it's really the same number. It's just how it's calculated, right? And with that being said, I'm just gonna go for the short version today and say a balanced market is 4 to 6 months of inventory. So since we're below that at 2 months of inventory, that means that we are still currently in a seller's market. Obviously, it's a case-by-case basis for every listing, but in general, at the macro, we are in a seller's market still. Median days on market, it's just about the same at the 21 days on market versus last year 22. Ooh, big change. No, it's pretty much the same. Properties are moving at the same approximate speed as last year. Here are the statistics from the Milwaukee Metro MLS. So again, that covers all the counties surrounding Milwaukee. And that over here, we can kind of see, you can take a second, take a screenshot if you want, pause it, and you can look at all of these different items all in one place. But we're going to dive into a little bit of each of these step by step here as we go forward. New listings. The very, very short version, we have December, November, October. Right here, it's basically the same as the last year before. The only other thing is this, remember, this is how many new listings are coming onto the market, not how many are available, not how many have sold, but this is how many new. What is the fresh, positive impact of inventory, right? The higher this is, it means that new stuff came on. This last month, there was just like the year before, almost the exact same, like we saw in our last graphic, right? And we can see that our peak is a little bit lower, so that means that we're going into quarter four with a little bit less new inventory that came in prior years, almost every single year. You can see that just visually. So with that being said, that's why the supply, again, is still super, super low and not been really replenished at all from the handful of years that we've been struggling with low inventory with COVID. Scrolling down, we have pending sales, and this is, as a reminder, how many are under contract now that are getting ready to close. Not all of these are going to close because not every deal closes, but they're getting ready to go off of the market. This is down a little bit from the year, up a little bit from the year before, and pretty comparable from the prior year. So everything is just about on trend for these prior years. Nothing really standing out, if I'm being completely honest, on this slide. Closed sales, again, super quick and simple. We are at almost the exact same for closed sales from last year. It's down from the years prior, but why is that? Is it, oh my gosh, houses aren't selling anymore? No, like you saw, there's just not enough houses on the market to then get sold. Supply is just too low, and as soon as we get more supply, I anticipate those to go up. Days on market, again, very quick, not a lot to touch on here. Pretty much the same as prior years. Things are moving very, very quickly, and we're at about 21 days on market. Like you've seen in the past, it's usually very, very common for people to have 6-month or 12-month listing agreements. Why? Because it takes time to sell a house. So the fact that the norm right now has been floating around this kind of 30 to 40 days on market until getting a contract is pretty incredible. It's not a statistical norm for a long time ago, but keeping that in mind, nothing has really changed in how long properties are sitting on the market until they get under contract within the last handful of years. Median sales price, I'll pause here so you can pause it, take a look if you'd like to for all the statistics, but I like to go to average sale price usually, and be able to see here. We can see we're coming down and going, oh my gosh, our home value is crashing. No, it's just Q4. There's always less available out there and less competition, so property values sink down a little bit, and we're pretty much on trend with the same slope almost every year. Here's a lot thinner of a slope for a lot of these years. We're going down faster, but if you keep in mind when we're going up here, the increase was also pretty massive. So it's something that if you're looking for the indicator of a bubble burst, this right here, it's not it. So don't misconstrue that for being like, oh no, home values are crashing. Since we already saw there's such low inventory, it's just not happening right now. We'll need to get up to over 3 times the amount of inventory we have, from around 2,000 properties in the market up to 6,000, to make it like it was, 10 years ago. And here's the fun one. So this is the average list to sale price ratio. So a property listed for $100,000 and sold for $100,000, that would be 100% list to sale price ratio. You got exactly what you wanted. Now, if it's below that, then that means you get under asking price. Above that, over asking price. Very easy, right? So in Q4, it's very, very common that we're going to get the lowest list to sale price ratio of the rest of the year. And we can see right here, it's dipping down at a pretty regular rate compared to these other years in Q4. You can see that visually on the graph. That's why I like these graphs so much. And we can see, in compared to prior years, we're right smack dab where we're at. Now, if it was some sort of bubble burst or some sort of issue, we might see it be way down lower than prior years in statistics. And this year, in Q4, we usually have significantly less. Closer to the 94 to 98% range. But now, just because of how things have been the handful of the past few years, it's pretty normal that we're still getting pretty close to asking price, but we're just a little bit underneath at that 99.1%, which basically is saying like, yeah, you're probably going to be getting asking price as long as you're pretty reasonable. It's just saying like, in order to get kind of that on average of a bunch of people flocking to your listing, and if that's your goal, now is not the time to list, right? But if you're a buyer out there trying to snag a deal or something, now would be your time to jump before you try to compete with the people. But if your goal is to I just want to get a mad frenzy, you're not in a huge rush, you're going to want to wait. So just keep that in mind, whether you're looking to buy or sell right now in Q4 or waiting till Q1 of next year. Actual amount of inventory. This is what I mentioned earlier, right? So we're right now at the 2,700. So let's just say around 3,000. Right up here, we're at the 6,000 to 8,000 is when it was totally a different market, completely different, right? So that's anywhere from, let's say, 2 to 2.5 times what we currently have. So we need double the amount of houses that are on market to kind of get it over to a higher inventory scenario, and it will take a lot of work it'll take, in my opinion, years of work to work our ways back up to getting to a regular amount of properties, probably up in this kind of 4,000 to 6,000 range, much less the overabundance of 6,000 to 8,000. That will take so much to do, which is why when I show people this graphic, they're like, oh my gosh, if I'm going to be only waiting, just to get a house, and I want to wait for the bubble to burst, it's going to be years. You're going to be waiting years, and most people don't want to have to do that. They can get into something now to hold them off until they want to get something, maybe a better deal or switch things up a little bit later. So really, it will just take a long time to get from 2,800 to 6,000 listings. And keep that in mind whether you're, again, wanting to buy or sell now in Q4 or wait until Q1. Months of supply. Are you tired of hearing this yet? There is just around 2 months of inventory. We've been floating between 1 and 2 months worth of inventory, closer to 2 months for years now. This is from 2020 all the way until now. Over 3 years, we've been floating right around this mark. Nothing has changed, and until we get more inventory, we're going to continue to see this compression of values staying at where they're at or still on an upward increasing trend, and we really need that relief. We can feel it here, both on the buyer and seller side. When we're with my clients right now, anywhere in the Milwaukee metro surrounding area, these kind of 4 or 5 counties that we're in, you can feel it, which is actually also pushing a lot of my buyers to consider new construction. And if you can get into the right neighborhoods, you're willing to drive a little bit further to work, things like that, you can get in some of these pocket neighborhoods that don't cost quite as much money, and they have some really great options to build. My wife and I are actually kind of looking at potential build options for ourselves as well. and be able to say, hey, is this even in our budget at all and in our timeline? Do a little bit of backwards research and see if that's the case. And you might be surprised about the amount of options you have out there to you, especially if honestly you're like in the anywhere from, let's say, high 400,000 to low 700,000. It's a huge range, I know. But if you're in that range, you have a lot of really good potential options, and you're going to be able to, get something exactly what you like in the timeline that you want to get, to where you want to be, and it be actually exactly what you want. So I have a lot more people that are migrating from existing homes to new build that are in that price range. When you get below that, you kind of just need to wait or fight harder or send out letters or canvass an exact neighborhood specifically to find the perfect home, because right now it's just tough with how expensive lots, but even that's not the main problem, building is. That is going to be your main constraint for these buyers in that sub $400,000 price point range to get into a new build. So you're probably just going to want to be able to look at existing homes currently in all of Milwaukee metro surrounding areas. Breaking it down by price point, let's see what the stats are, and we'll go a lot quicker than some of our other prior months market updates. The overall average sale price for everything lumped together is $359,000 compared to last year's $343,000. So again, an increase there, an increase single family to $370,000, and condos down at $320,000. Looking at our closed sales, these are the items, again, that left the market this last month. So that would be a negative result on inventory, right? So if we have a really big number that closed, that means a lot, a big negative number, that means a lot left. Where if we have a really low number, it's like a positive, right? That means that less is leaving the market from prior years. So where is the biggest change? We see in that 1 to 200,000, we have less leaving the market. And we have in the 700 to 1 million range, more leaving the market. More have had a successful closing in the month of October going into quarter 4. Pending sales, these are what are under contract as of this last month that we can expect in November to most likely be closing. So we're probably going to see a pretty large increase this next month of closed properties, items, again, that are leaving the market, lower in the inventory, they're going to be more gone in the 0 to 100,000 range. We're going to be more leaving the market in 2 to 3, a lot more leaving the market in 5 to 7, and a good handful of the 700 to 1 million more leaving the market than last year. Days on market, how long until a property sells? What you can tell by looking at this is where it's the most compressed and where is the most highest competition on a property. We can see that right here, 3 to 500,000, things are going really fast. 2 to 300,000, things are going really fast in these. Now we see a longer wait than in the past year in the 5 to 700,000. So that luxury price range of 1 to 3 million being a little bit longer on market. List to sale price ratio, we can see here all across the board, going down a little, up, about the same, down a little, up a little, and up a tiny bit here. Go ahead, take a screenshot, pause here. You can analyze through here. There's not a whole lot of monumental stuff to take away from this. The only thing that I can see here is that people are getting more deals in the $0 to $100,000 price range, right? So in that beginning tier, of the lowest price range possible in our market, there are more deals happening where they're going, okay, yeah, I'll give you a discount. I'll accept a lower than asking price offer. Where everything else is pretty ironclad and anywhere from this 97 to 101% of list price. Total inventory and number of units, so this most likely will interest any of you. This is going about the same, a little bit less than 2 to 300,000 than last year, a little tiny bit less than 3 to 5, about the same, tiny bit more in 5 to 7, about the same. So total inventory on market is pretty darn identical to last year. Now instead of units of supply, this is the metrics of how many months worth of supply is actually sitting and available. And supply measured in months worth of supply, we have a little bit less inventory, a little more inventory, about the same, a little bit less inventory, so a little bit more kind of seller's market-y here this month compared to last month. Right here in this 5 to 7 looks like it's getting a little closer, inching towards balanced market. And the 1 to 3 million, it looks like we have a pretty decently balanced at 6 months. It almost tips over into a buyer's market just from these statistics. But remember, This is going into quarter 4. So this is already going to be a little bit slower than usual. So it's not like, oh wow, everything's sitting forever and there's a bunch of supply. No. It just is also meaning this can be impacted seasonally by saying that, with the supply, it doesn't churn quite as fast. So that means that it actually automatically bumps up our total months of supply when going into quarter 4 versus going into like quarter 2 or 3 where things are flying off the shelves like crazy. So is impending doom on our future for 2024? My biggest complaints from almost anyone I talk to, my clients, friends, family, the media that's out there, it's always saying that home values are too high and not sustainable, and interest rates are crazy high, going all the way up to the 7 to 8% range, and going, man, it's impossible for us to buy a house, first-time buyers, it's impossible for us to downsize successfully, it's impossible to actually make a transition and not feel like I'm getting completely robbed and doubling or tripling my mortgage payment. Where are you at? Is that your story, or is there something different, or do you see this changing anytime soon? Leave a comment below, and I would love to respond to that and also see what everyone else has to say, because it's always interesting to see what everyone else's crystal ball has in store for them, what they think for 2024, and what they're currently experiencing now, and how we can hear some of your story. Thank you for tuning in to our monthly market update. We do these every single month, so make sure to subscribe, leave a like below, and ring a notification doorbell so you don't miss any of our future videos, with the final reminder to click the link both in the description and the pinned comment if you would like to start a conversation or learn what it's like to partner with us here at eXp Realty as an agent both in Wisconsin or anywhere in the world. Thank you so much, and we will see you next time.